let me give a quick intro for Neil, and then he's going to take it from there with everyone else. So Neil Kaufman is the managing member of Kaufman McGowan, PLLC. It's a law firm. He's that managing member of Long Island's corporate and securities law firm and corporate and securities counsel to the cannabis industry. He is one of the leading corporate cannabis lawyers in New York and the USA, and is a fixture of the New York and Long Island corporate and securities legal community. Neil represents emerging growth, middle market, and public companies and investment firms in their corporate securities, financing, borrowing, merger and acquisitions, and other legal matters. Mr. Kaufman is particularly well known for advising clients with respect to SEC regulation, public offerings, private placements, and mergers and acquisitions, as well as all types of commercial contracts. He is a frequent speaker on corporate, securities, and cannabis law topics, and is an approved Vistage speaker on mergers and acquisitions. And it goes on and on from there. He is very well known here in New York State, New York City, among other states around. And everyone on this panel is also well known across the United States, and what they offer as services and expertise in the cannabis industry. And we all know this is God's work. It's not easy work, and it's an expertise that not everybody can do or stay in and tough this out. And with the impending rescheduling that's happening, this panel, I think at this point, is extremely important. And we're going to tie all that up, tie all that in. And I can't think of a better moderator and better panelist to do that. Thank you, Neil. Take it from here.
Thank you, Christine. Just to complete the bio, in addition to running our law firm, where we've participated over the last 10 years in over $2 billion of cannabis industry transactions, I am also serve on the board of trustees, and I'm the audit committee chairman of 2 mutual fund families, and I'm the chairman emeritus of the Long Island Capital Alliance, a nonprofit that has helped dozens and dozens of local companies raise hundreds of millions of dollars of growth capital every year. And we are July 12th, in another month or so, running our 5th annual Cannabis Capital Forum, where we'll have half a dozen cannabis companies present to a room full of investors and try to make some matches. So let me just go down the line here and allow my panelists to introduce themselves. First up is Drew Mathews, the founder and CEO of Green Life Businesses. Green Life is one of the leading nationwide business brokers for cannabis companies. So Drew is really at the epicenter of a lot of the activity in the industry. Drew, you want to just have a brief bio?
Yeah, how are you doing, everybody? Yeah, my name is Drew Mathews, CEO of Green Life Business Group. Launched the company in 2016. We started just in California, have expanded into now 21 states. We represent currently over 250 active listings that are currently on the market, and we've done over 300 cannabis transactions. So we're very, very well versed on the M&A side, and we've seen a lot of ups and downs in the industry, but I would say things are definitely peaking in terms of inquiries more than ever. So happy to discuss that.
Okay, and to Drew's immediate left is Jacob Miller, the COO of Paybotic, one of the leading payment services companies in the country. And Jacob, a little more background?
Hey, everyone. Thank you, Neil, and thank you, Christine, CWCB, for having me and the panel here today. Yes, COO of Paybotic. We provide payment processing solutions to the cannabis industry. We also recently launched Paybotic Financial, which provides banking services to the industry as well, so enabling cannabis business to have depository accounts where they can do ACHs and wires and issue corporate cards. So really, in the financial services space, how that intersects with cannabis is kind of where we play. We also do a little on the insurance side, but I know Jeff will be talking a little bit more about that as well.
And on cue, to Jacob's left, is Jeff Booker, who is today playing the role of Nichelle Santos. And Jeff and Nichelle are in the cannabis insurance industry. Jeff, a little bit of bio.
Thank you. I certainly appreciate that. Neil, again, my name is Jeff Booker. I am the not as good-looking partner at CannaCoverage, as opposed to Nichelle, as she's otherwise engaged right now. I have spent the last 30 years in the insurance industry. I've worked on all sides of the industry. I work with large group, small group, nonprofit, public sector, large accounts, thousands of employees. and everywhere in between. About 4 years ago, Nichelle and I created CannaCoverage to bring experienced risk management and insurance consulting services, both on the property and casualty side as well as the employee benefit side, to the cannabis industry that needs it, right? So it's like any other business, right? So you need all of these things in place. So CannaCoverage was created to address that need. We're headquartered in Newark, New Jersey, but doing business coast to coast. Again, it's important as folks stand their businesses up and prepare to be acquired one day, et cetera, that you have the appropriate risk management in place, the appropriate insurance programs in place to reduce the severity and the frequency of claims, right? That will make your company more attractive to be acquired, right? If you're well run, you're strong SOPs, you're compliant, et cetera. So it's all looking ahead, do things right now so that in year 3, 5, 7, 10, whatever it is down the road, you're an attractive prospect because you've been run the right way and manage your risk.
That's pretty impressive, Jeff. You covered your entire content matter within your bio. We don't need to come back to you now. Unfortunately, Sandy Sukoff of the CannaCPAs was unable to join us on the panel today. She really does have a very good excuse. She has COVID. So if she really does have, having COVID, we're happy that she's not with us in person. So what we're going to discuss with you this afternoon is loosely called transactions and services to expand your cannabis business. What we're really going to try to focus on is helping you understand how to improve the value of your business by things like increasing your revenues in some particular aspects of that, mitigating your risk, also that you can then go off and be ready to raise capital, buy other businesses, grow through acquisitions, and ultimately sell your business, creating the generational wealth that the New York regulators at least claim is the whole goal of the New York regulatory system. So if you're going to grow your cannabis business, it's kind of obvious that you need to start with increasing your revenues. But you know, there's revenues and there's revenues, and different types of revenues have different values attributable to them. And you know, I'd really like to start off with Jacob to discuss a little bit about how a cannabis business can minimize collection risk, diversify sales channels and revenue streams, and enable its revenues to be as stable and sticky as possible. So, Jacob?
100%. And a lot of different things there. So we'll try to tackle those one at a time. I think first, an important thing to understand for these businesses is the need to accept payments electronically. Just having cash in the store leads to numerous risks that we don't need to get into today, but having a way for your customer to pay is super important, and having those funds become available to your business in a really short period of time so you can pay employees, so you can pay bills, so you can buy new inventory. And so the availability of that cash is just as important as the payment channel that it's coming in on. So we provide debit solutions for in-store payments, and more recently have launched ACH, getting ready for ACH in-store. ACH e-commerce is launched today. And so first thing I would say is just having multiple payment channels is important for any business. The second thing, just comparing electronic transactions to cash transactions. When someone comes in and they're using a debit card, they don't have a ceiling of what they're going to spend. They're not just spending the cash that's in their wallet. You can also have impulse purchases available at the register, accessory products, additional items to increase that ticket size. We've also seen, just compared to debit and ACH, higher ticket sizes on the ACH side of things when customers are, triggered with impulse purchases like rolling papers or grinders or pipes, things along that line. So multiple strategies that you could implement to maximize revenue, but different payment channels and allowing the customers to pay in various ways is incredibly important. And so having a good payments partner is a big piece of that. So
Jacob, what solutions are you seeing, particularly in New York, where for delivery services in particular, you need to have prepayment? So Are there solutions available? And if so, what solutions are available to New York retailers that can satisfy the regulatory requirements and are doable in the current environment where MasterCard and Visa still just will not process cannabis transactions on credit cards?
Yes, exactly. And so there are solutions, and I'll just elaborate a little bit on the problem, which is that New York businesses have a requirement for prepayment before product is dispatched, and I don't believe anything has changed to that regard. And so the ability for a consumer to pay with cash or even with a card upon delivery in a terminal, which is very popular in other states, and we provide that solution in many other states, and the terminals are 4G enabled, but that doesn't work in New York because of this regulatory requirement. And so ACH just becomes really the dominant option where you allow customers in the e-commerce shopping cart experience to complete the transaction and actually pay and debit the customer's bank account. And so what we enable is the customers to be able to create a profile, link an external bank account, and then actually pay the merchant directly through the ACH rail. And so that's one of the solutions that we offer that's live in New York, and we've got a New York merchant using that today to support their delivery business. And what I'll say, which was surprising, what we saw in the data with this particular merchant was that the ACH business did not detract from their overall volumes. It actually went up. When they added ACH as an option, we thought that that might cannibalize some of the other debit processing business for retail and other things, but that actually wasn't the case for them, and their revenues just went up overall.
So the reason why I wanted to focus on that right off the bat is because different types of revenues for a business carry different values. Low-margin project revenue is not nearly as valuable revenue as high-margin recurring revenue. And so, Drew, maybe you can address this a little bit with respect to the companies that you see on the market for sale. What are the best attributes that they have that can maximize the value of their business?
I mean, it always comes back to obviously either net income or EBITDA. A lot of these guys that we do represent will have stores that are doing $6-7 million in top line. We actually had a store in San Diego that was doing 10 million top line, and it had a net income of 111,000. And even a store like that, where a lot of people aren't buying these things on projections or pro forma, I need to see what I'm actually getting on a return. We were able to actually still get this deal in escrow at $4.5 million because San Diego is a very limited market. It's actually the most desirable market in all of California. There's about 3.5 million people in the county, so there's very limited licenses. And his point of the story is that in order to be able to maximize, you want to be able to trim the fat. We're looking at the guys that are the best operators, or the guys that are getting top dollar, or the guys that, I hate to say it, but it's not really the MSOs, it's not the public guys, it's the guys that are, the husband and wife that are, just grinding, that are ensuring that they're maximizing the store A through Z. There's on the street that we have our office on, which is Camino del Rio South, there's actually 4 different dispensaries all within about a half a mile of each other, maybe about a mile. And without name dropping, the first one, they do about 12 million a year in top line revenue, and they're about 500 square feet. The next store right next to it's about 5,000 square feet, and they do about 3 million in sales. As you move over, there's March and Ash right across the street from us. They do, over 20 million in sales. And then you got the husband and wife, which is a listing that we represent right now, that do over 30 million in sales. This is all these different stores, different sizes, and all within a half mile or mile of each other. And we're talking about 12 million, 3 million, 20 million, and 30 million. What is the difference? How are you maximizing that? Again, that goes back to the business model that's running it A through Z, understanding that the bud tenders are actually key components of the business, being able to bring up that average ticket. not just having somebody behind the counter just taking a sale, but actually understanding who's walking in. I mean, the guys that are bringing in the highest revenues or actually moving up the average ticket, they're actually getting to know the customer. Jack comes in for, let's say, Blue Dream, and just letting them know that you have other options, and always, upselling without being, a cheesy salesman about it, and just understanding that this experience for that user could actually be the highlight of their day. So increasing those average tickets, ensuring that you're, being able to just maximize, both delivery, the storefront component, getting the revenues as high as possible. The people that are actually pulling the trigger are guys that are looking for healthy, profitable businesses, but not where the owner does everything perfectly. Nobody wants to buy a business where the owner does everything because there's no upside. So it's finding a healthy business that obviously has potential for upside, but again, is very, very profitable, which is, I'm sure is a very challenging to find in this industry today.
And so keep in mind, if you're looking to sell your business someday, build it and sell it, what's going to really drive higher valuation will be, at a certain level, higher revenue volume, but also growth in your revenue, at higher margins, and stickiness. What buyers will pay more for is recurring revenue. So if you're operating a retail store, you want to convert as many of your walk-in customers who your bud tenders upsell as high as they can to generate volume and margins, but convert them to recurring delivery customers so that every month you have consistent revenue that a buyer can count on. That is just worth more to a buyer than project-based revenue, walk-in revenue that's more arbitrary and less stable. And it'll also help you get a better valuation from investors, or someone that's looking to possibly deploy capital in your business. It's just worth more. Volume, growth, margins, and recurring.
Yeah, and just one little tiny thing to add there from the payment side of things. There are things businesses can do to differentiate themselves from a recurring revenue standpoint. Gift cards, loyalty, other, these payment mechanisms become sticky. Your customer comes into your store, they know that they can pay with their linked bank account, and it's going to be no friction, and I don't even need to pull my wallet out of my pocket when I come in. I could come in with just my ID and complete a transaction. That enables the customer to, be a recurring customer and
make it easy, as frictionless as
exactly.
possible.
Exactly.
And I can only also pass along anecdotally from some of my clients in the retail side of the business. Retail customers tend to be loyal until you give them the first batch of shitty weed, and then they're not so loyal. So it's very important to maintain quality control as well. And if you can maintain quality control, make it as frictionless as possible, convert as much as possible to recurring delivery revenue, now you've got a business that's starting to be worth something. And when you're building that value, then the next question is, well, how do I mitigate the downside, mitigate the risks, mitigate the risk of walking in one day and the whole thing has blown to smithereens, or you've otherwise frittered away a significant part of that value that you've built up by diversifying and strengthening your revenue streams. So these are things like making sure you stay in regulatory compliance. SOPs and training is a critical aspect of cannabis businesses that a lot of people don't pay as much attention to as maybe they should. Insurance coverage, and particularly making sure for a cannabis business that your insurance policies that you're paying premiums on actually cover you. Because for many years, I would see insurance policies that would have your standard illegal acts exclusion. Well, guess what? Cannabis may be legal in your home state, but it's still not legal federally. And even if it's rescheduled down to Schedule 3, it's still not legal federally. And if you have a standard illegal acts exclusion in your insurance policy, you are paying premiums for nothing because you're covered for nothing. And so that situation has improved significantly over the last few years. There now are cannabis specific policies in the market, and there are, I think, more underwriters. You can comment on this, Jeff, that are willing to underwrite cannabis policies. Can we get some comments from you, Jeff, on this topic?
Yeah, no, I certainly can do that, and Neil's right. There's a real move in the marketplace to have these policies, be actually worth the paper they're printed on, because for a while they weren't. And unless you know how to read an insurance policy, know how to look at the exclusions, how to understand how the insurance company is writing the policy so they don't have to pay, right? So they're in the business not to pay if they can avoid it. But one of the things that it's important to look at, and one of the things that we do for our clients, is to do an assessment of your insurance portfolio. Do you have what you think you have, right? And not only that, are you paying more than what you should? And generally speaking, you get what you pay for. If you get 3 or 4 quotes from carriers, and one is half the price of everybody else, there's a good chance that really, really cheap one doesn't cover anything, right? So, and that's where your broker or your consultant can be very helpful to help you understand what you're buying, right? You don't want to have a situation where, you come in, the next morning, and there's been smash and grab, and they've raided the safe, and et cetera, inside job. It happens all the time, right? So you don't want to be in a situation where now you go to pull that policy out.
Well, you better have some better SOPs if that happens all the time.
Exactly. Well, it happens more than you might think. And often what we see across the country is that when there are issues with employee theft or other inside challenges, is that you may have great SOPs, but if your employees are intent on trying to take from you, they'll find a way. SOPs make it harder, right? But the purpose of
you have to follow them.
Well, if you follow them, but even those who do, we've seen situations where the SOPs were perfect. They were followed, but somebody still wanted to do the wrong thing, and then you have an issue, right? So risk management is important, because the process by which you manage your risk is to properly assess your risk, right? And then based on the assessment, you mitigate that risk based on what the assessment has told you should be doing. And then the third part is whatever mitigation steps were in place where we couldn't necessarily cover all the risk. The third part of that is risk transfer. That's insurance, right? That is the process, and it's important to have an understanding of that, and to make sure that you're not relying on a policy you had 5 years ago, but before you were in cannabis. Oh, I have State Farm, I got Allstate, etc. That if you are relying on those legacy policies, you're in trouble, right?
And if you just went to your regular insurance broker, chances are they're not focused on the cannabis nuances, and you may very well not be covered.
That's exactly right. I mean, it's very often where we will be looking at a policy. Oh, I'm covered because my policy. And yeah, you were covered when you were,
running a shoe store, but not a cannabis store.
Right. So now these exclusions are there, and you're in trouble. So.
And I think in the context of transactions and M&A, that's something that a sophisticated buyer is going to do their diligence on. When they're looking and they see that you don't have coverage and you could be possibly exposed, you didn't have coverage, maybe there's historical claims that might come up that they didn't know about that weren't under the policy period of a new policy that you even bind. And so,
depending on who the buyer is, right? A lot of buyers have their own umbrella coverage that they will apply to your business, and as long as you don't have an outstanding claim as of closing, you'll be fine, because most policies are claims made, and they'll cover you afterwards. But if you have a problem, an issue, right, like you're going to own that.
Exactly. And so, yeah, just things to think about during a transaction. I'm sure insurance is hugely important, and I think what has changed in the past couple of years in this space is these businesses that were just getting started out, maybe you were building out, maybe you had your first couple customers, now they're doing a couple million in revenue. You've got something worth, insuring, and worth, there's a lot of value that's being created in these different businesses and brands. And so, insurance, as Jeff was saying, transferring that risk when you've got something super valuable, you want to protect it.
And by the way, when you have those policies, keep track of them, keep copies of them, download them when they email you the actual policy itself, because you're going to need those if you sell the company. I'm always shocked that when we go through an M&A deal, I shouldn't be shocked anymore because I see it all the time. But like one of the last things we get are the copies of the insurance policies that the lawyers then have to read through and make sure that they have a proper coverage. Like that should be the first thing readily available, right in, saved electronically as soon as it comes in from the broker. Some other issues.
One other thing, if I could,
Yeah.
while we're talking about looking at risk and insurance, it isn't just having coverage. It's what coverage you have, right? And there are two types of policies that are getting more and more attention right now, and it's late, but better late than never, and that's directors and officers, what we call D&O, right? And also employment practices liability insurance. Those two things, those two policies are something that we're seeing a lot more of, which goes to preparing yourself down the line to be acquired or whatever. What has happened while you've had the company? Have there been any claims? Are you in a situation where you've been able to properly protect yourself from suits as you're acting as an owner, as you're acting as a director, someone running the organization, or are you protected from suits from your employees, right? So all these things wrap around to make sure you're properly covered.
Yeah, I think keep in mind, you don't really need D&O insurance unless you're going to go public, or at a minimum, you're taking in outside investors. Until you get to the point of taking in outside investors, you generally don't need D&O insurance. That's when you should start thinking about it, would be my advice. So some other ways to mitigate risk, getting back to some of the things we've talked about, are internal controls. 10 years ago, when we first got involved in the cannabis industry and we started talking about internal controls with clients going through their first audits, we heard a lot of, oh man, this is cannabis, man. Don't people understand? This industry's special. We don't need that stuff. Well, no, not anymore. Cannabis is almost like every other industry, and that's where a lot of cannabis companies struggle going through their first audits, and that's where, look, the practical reality is the majority of businesses in this country experience employee theft, and a lack of adequate internal controls just makes it that much easier. And then following corporate formalities and proper documentation is another way to mitigate personal liability and reduce the risk of deals falling apart just when you're counting on them.
And one thing to add, internal controls, theft, all of these things ring true, I think, in this industry, maybe a little more so than others, but from the payment side of things, what we talk to our customers about is just reducing cash. Obviously, you can't eliminate cash in this industry, in this environment, but as soon as cash goes into a business, it shrinks. That's the reality of it. And so if you can eliminate it, is not eliminate it, but reduce the amount of cash, right. That's a really, I think, good strategy. And then the other thing that we see from our kind of B2B customers is they are typically being asked to take the cash problem on from the retailers. So the retailers want to pay those bills in cash. And we tell those customers, hey, you want to have a good invoicing strategy. You want to be able to send your customers an invoice and have them pay you electronically, and don't take on their burden of that cash. And so from just this context of topics, I thought that was...
Right, which should be a lessening problem, as banking services are now far more widely available at all levels of the chain of business in the industry. Absolutely. And keep in mind not to lose track of internal controls over cash itself, because that can be a real challenge when especially it's time to go through your first audit. Now, we're going to now pivot this discussion a little bit and talk about the big picture ways to grow your business. Raising growth capital, ultimately perhaps selling your business, and the way to improve value and increase the likelihood of being able to get to closing on those kinds of transactions, and there's some overlap there. So if you're going to go out and raise capital, you want to do some of the things we've been talking about. Increase your cash flow, your revenues, your margins, the stickiness of your revenue. You want to turn as much of your revenue as possible into long-term revenue, and one way to do that is to contractualize it. Not so much at the retail level, but on the supply side, which we haven't focused as much on so far. Have long-term contracts with your customers as much as possible. Even dress them up as long-term contracts as much as possible. Recurring contractual revenue is more valuable than purchase order, one-off revenue. So put that in place wherever possible with your customers. Assemble your team. Have a solid management team. Get your company prepared. Clean up your house. Get ready. Package up the company, and then manage the process. So with respect to assembling your team, we were talking briefly about employee theft. Well, any good CFO can figure out a way to steal money from the company. You want to have one that's not going to do that. Because your CFO, or if you don't have a CFO level person, your controller, the people running your books and records are critical. Especially in the cannabis industry, you want to make sure that your general ledger ties out to your track and trace. Getting that software to communicate is not so easy. You need to keep track on both levels, and that's really a critical role in every organization, especially if you're going to go through the financing or M&A process. Having a good outside accountant is also very important, and especially in cannabis. 280E may go away. It will go away if we get rescheduling down to Schedule 3. We don't know when that's going to be. That is unpredictable and subject to potential delays in the judicial process. In the meantime, 280E still applies, and it crushes retail especially. It has a less onerous impact on the cultivation end, sort of intermediate in the manufacturing processing end. But especially for retail, you've got to be super careful and structure around that, and you need an accountant who can advise you to take appropriate tax mitigation positions without necessarily taking some of the positions that we've seen blown up on people from time to time. And then, of course, also be familiar with GAAP accounting, and those are two completely separate things. Tax accounting and GAAP accounting are not the same. If you're going to take in investment or sell your company, you're going to need GAAP-based financial statements. That's different than your tax returns. Keep that in mind. They are two different things. And so you're having an outside accountant that can do both and that is aware of the special cannabis industry tax issues is critically important. You're going to need a lawyer who understands both the capital raising and M&A process and cannabis. There are not all that many of us. You can hire a big firm that has really great corporate lawyers. They probably won't know that much about cannabis. You can hire a cannabis lawyer. Most of them don't know that much about how to get deals closed. And so that combination of expertise is very, very important to avoid your deals blowing up on you. Your regulatory compliance team is, of course, especially important in cannabis. You can satisfy those needs internally through compliance consultants or through attorneys. A lot of that's going to depend on the people that you have on your team, what their skills are, what the costs are, but that is a critical role not to be forsaken. If you're going to raise money, having a placement agent is enormously helpful if you don't have your own network of investors. If you're going to sell the company, it's a rare seller that will be able to do that on their own without assistance of an expert like Drew and his firm. So one of the things that I like to say is when you hire a business broker or an investment banker, if someone's willing to take you on a non-exclusive basis, you probably do not want to hire them, because rarely does a professional in that industry find it worth their while to work on a non-exclusive basis. And there are some other particular aspects of engaging an investment banker or a business broker, but I would really like Drew to chime in here and provide us his insights on that part of the process.
Yeah, absolutely. So, if you're ever looking to sell your business, and I would say one of the key elements is if you are going to retain like an investment banker or a broker, one of the things you want to focus on is obviously their track record. Look at how many deals they've done. Look at how many current listings. If people are comfortable enough to give someone an exclusive with their baby, right, their business. And all of our listings we're exclusive on. They're all 6 to 9 months agreements. That's because we've performed on them. So I think that's very key. By the way, is when you are talking to anybody in terms of selling your business, is really understanding what is, first off, the valuation of the business. how many clients do they have, get references. These are all key components. I want to go back real quick to Neil mentioned about the attorney, and I'm just trying to put as much facts out there as I can for you guys. Like I said, we're in the trenches on this stuff, and the number one deal killer for cannabis deals is typically the buyer's attorney. And one thing that you want to make sure that you do get is, on the selling side, it's not as critical, but on the buying side, I would say, 50% of the...
If I could just briefly interrupt you, I think it's critical on both sides because one of the things you really need from your lawyer as a seller is the ability to identify for you what you really will need to clean up. Because eventually the buyer is going to do their due diligence, they're going to see all the warts, and a good seller's lawyer, I think, actually is critical to the deal because we go in, when we're engaged to represent a seller, we look at the company, we know we're going to have to do disclosure schedules to a merger or purchase agreement, and we go and we clean it up in advance.
But Neil,
there's two philosophies.
You're a good seller's attorney, though. That's the issue.
But I'm saying, but that's the key difference because a lot of times you'll take this is, I think, a very, very important point that everyone that's considering selling their business someday needs to take into account. So look, there's a cost to that, right? And a lot of sellers take the view, well, I'm not going to pay my lawyer now to clean up all the messes I've made over the years, because every business has made messes over the years. I'll wait till the buyer catches it, and then we'll deal with it then. The problem you have, though, right, is right, the buyer, sometimes the buyer says, well, you know what, that's the fourth thing we've caught, that's a major problem. We don't trust these guys anymore, we're done. And your whole deal blows up that everyone has invested so much time and effort and money into. So for a little bit of prophylactic investment, if you have a competent corporate cannabis lawyer, you can, as the seller, greatly increase the likelihood of getting to closure. We've had several deals where we've had clients sold to big MSOs for a lot of money, and the lawyers for the buyers have said to us, oh, thank God you guys were on top of this. You cleaned that pile of you-know-what up just the way I would have done it, thank you, right? And it just takes issues off the table and makes the deal more certain. So I'm sorry to interrupt you, but I think it's a critically important point.
And listen, I'm not debating that at all. I feel like the seller's attorney is definitely important, but for us, what I was saying is our number one deal killer is the buyer's attorneys. 50% of the work is maximizing the deal, getting the highest perceived value for the business, ensuring we have a real buyer that has real funds that can actually close, setting up the things that we need to make sure that we mitigate those red flags. And then once we got the deal in escrow, there's very few, what I don't think a lot of people understand, there's very few solid M&A cannabis attorneys on the buying side or just in general. So there's not that many of them. So if you get anyone that just says, I do cannabis, and you bring them to the table, I can bring you 20 deals that are in escrow, and every single one of those is a completely different due diligence packet. Every single person has their different process, and if it's somebody that's not an actual M&A attorney, which obviously cannabis is new, so there's not a lot of them out there, they're just kind of winging it. You can just feel it. They're just kind of going through the motions. And so for us, when you've got somebody that's trying to act more important than they actually are, or trying to just put a bunch of guards up. I mean, I always make the argument that a buyer's attorney makes more money if the deal doesn't go through. Yeah, I did all this due diligence. It wasn't the right one. Bring me another one. And you're looking for guys that are actually trying to complete the deal. So that's why I wanted to go back to, ensuring that if you are on the buying side or the selling side, make sure you do your homework, that it is a solid M&A attorney, and going back in terms of being able to actually package your business. You want a box with a red ribbon on it. You want all the whistles and
Next slide.
That's the next slide. Well, we did mention.
Come to it.
Yeah, we were talking about in terms of bringing the right investment banker, the right broker. How they should package it up. So that's why I was saying.
Right. That's critical. Let's move on to that. Packaging the company is essential. But just, what, before we go on, just a couple of little tidbits, right? A lot of business brokers and investment bankers are going to demand an upfront retainer, and you should not be shocked by that. And kind of the bigger the retainer, the better the firm. I hate to say it, but there's a little bit of a correlation there. Not necessarily causation, but correlation. So you shouldn't be offended by that. A lot of times an upfront retainer or a monthly fee will get credited against the ultimate success fee. So as long as you go through with the deal, it's not really costing you any more money. It's just that so much of the work of your sell-side advisor is done upfront in packaging the company that they need to be paid for their time and effort and to mitigate some of their risk in taking you on as a client. Because at the end of the day, you can ultimately turn around and say to them the night before closing, nah, I decided not to sell my baby, right? And they've done all this work already. So you shouldn't be shocked by that.
I mean, that's like also on a case by case. I mean, for us, the way our listings are drafted, we're only looking to deal with sellers that actually want to sell. So, there isn't like a mutual breakup clause. It actually, the broker fee gets accelerated if the seller backs out.
And by the way, this whole analysis applies to raising capital also on a slightly less intensive level, because investors will generally do just a little bit less scrutiny on the due diligence front most of the time than a buyer will, but it's a very, very similar process. And if you're going to take in sophisticated investors, their due diligence process will be almost the same thing. So a lot of this discussion really applies to both. Now, with respect to getting prepared, right, you want to have your management team locked in, positions filled with people who have demonstrated that they can do the job. Button down your regulatory issues. You do not want to have open regulatory problems going through either the investment or the sale process. If you have a small business, one of the ways to grow, we'll talk about this maybe hopefully more in a couple minutes, although we are running out of time, is by acquiring complementary business that helps you achieve scale, increase your revenue, increase your profitability if you integrate them well, and the bigger the enterprise and the higher the cash flow, the higher multiple that gets applied to that also. So you want to keep that in mind. In the cannabis industry especially, if you haven't already set it up properly, you may want to segregate assets, especially keeping real estate assets separate from operating assets. Again, so long as 280E still applies. You can't deduct your general operating expenses like depreciation and amortization on the cost of a build-out. So there's a heavy incentive in our industry to segregate assets. Do your corporate cleanup. Have your corporate books in order. Do a lien search. Get rid of those extraneous liens that somebody forgot to file a satisfaction on a year or two ago or more. These are the kind of things that delay and jeopardize closings. Make sure you own your IP, that you have work for hire agreements with your employees, that you have even if your trademark cannot be registered at the federal level because it's cannabis, get it registered at the state level. Get registered whatever you can at the federal level. If you're working on handshake deals, get them formalized. The more contractual, the better. These are all the things you can do to make your company more attractive to investors and buyers. If you haven't paid your taxes, at least file your tax returns. If you want to take an aggressive 280E position, you can do that, especially nowadays where some of the MSOs have blazed that pathway. That requires disclosure about uncertain tax positions. Fine, just be transparent about it. Keep in mind, you're going to own your tax liability as a seller of your business. No buyer is taking on your 280E or other tax liabilities. You're going to be fully indemnifying any buyer for that. So again, try to minimize that risk. And with respect to your financial statements, expect some level of attestation to be required. It may have to be an audit. You oftentimes can get away with a review, not usually a compilation, which are the three standards of attestation, and make sure that you have an experienced and reputable accounting firm that can answer the questions of an investor or a buyer and will not have screwed them up, as so often is the case. Once you have your baseline historical financial statements, you're then going to adjust them on a pro forma basis for the kinds of expenses that can be eliminated when your business is in the hands of a buyer. Go ahead, once we'll finish this thought, and then you can jump in, Jacob. Once you have that done, then you're going to do your projections. Based on your pro forma adjusted historical financial statements, you will then forecast your net income, cash flow, EBITDA, as to what it would look like in the hands of a buyer, or what it will look like once you have that investment capital that you're raising and have that capital deployed. You build on your pro forma adjusted financial statements to create those projections. That's how you get to maximal value. Go ahead, Jacob.
No, I was just building on what you were saying, trying to reduce those expenses. And I think one of the big areas that the cannabis vendors don't typically pay enough attention to are the various vendors that they have, whether they're the financial services vendors like the payments and banking contracts like us, the software and IT vendors, the point of sale companies, the security, the internet and connectivity services that they have. And so sometimes the expenses can add up in those categories, and those are good areas to really look at, to trim the fat, to Drew's point earlier, when you're kind of packaging things up for sale. So
very quickly, because we are running out of time here, I'm sorry. You want to then package up the company, and this is where guys like Drew are extremely helpful with a well-done offering document, deck, get your due diligence data room populated, well-organized, be compliant. We talked about the pro forma financials. And then, Drew, I especially want you to talk a little bit about the strategy of buy to sell. So many cannabis businesses outside of the big MSOs are relatively small businesses, and as businesses scale, they can attract higher multiples and values. So I'd like you to address sort of the whole strategy of building value in your business by acquiring competitors or other complementary businesses, achieving that scale and maximizing your value, and in particular, focus and give us the benefit of your experience with respect to distressed opportunities that are so prevalent right now in the marketplace, like with receiverships.
Yeah, absolutely. So, I mean, very rarely right now, I'm sure as you guys know, there's not a lot of all-cash deals that are happening in the marketplace. And we do have, some deals. There's one actually in particular that is a deal that's out of California. It's a location in Santa Ana that does very high revenues, and the buyer is new to cannabis, and there's a lot of these kind of guys popping up, and these guys will deploy these kind of all cash offers. But for the norm, the majority of the deals that we have in escrow are guys that have 3 to 5 stores that are looking to buy distressed, really good deals. We deal with a lot of deals that are in receivership. We're handling the High Times receivership deal, which has been a total mess as well. We've done deals like, I don't know if you guys have heard of the Aeon West Hollywood. We've done a big brand that was called Candescent. This was a grow that took about $9 or $10 million to set up, about 67,000 square foot of canopy. That deal went in escrow for $1 million. There was the Lighthouse deal where they put over $2.5 million into that location. That got picked up for $400,000. These are, and why I think the receivership deals are so amazing is, one, they typically go for pennies on the dollar. You're able to get something that has something from the court, from the judge, that's a court order that, all prior liens, taxes, everything gets wiped clean. And just these receivership deals, a lot of people don't even know they exist, and that that there's a whole process that's involved with obtaining one of these deals. So I think if you're somebody that has a few stores and you're looking to build your portfolio, there's never been a better time to pick up deals that I feel like are just distressed, or there's deals right now in
Outside of New York.
Yeah, outside of New York, all across the map, that are deals that are going for under 0.3 top line revenue, and it's just an operator that's just bleeding, just can't run it, or is just burnt out. And if you're looking for those type of deals, whether it's through receivership or just looking for deals that have tremendous upside, great location, but the operators run out of capital, those deals absolutely do exist, and we market them all the time.
And there are a lot of those kind of deals in New York where we have people that have gotten licenses but really are not prepared to exploit those licenses. Maybe they don't have capital, maybe they don't have experience, and so those deals are available in this marketplace. So we're just about out of time. Drew, could you just touch briefly on sort of what cannabis market segments are hot or not? What's attracting good valuations, and what trends you're seeing in the marketplace?
Absolutely. So going from West Coast to East Coast, I'm basing this on inquiries and deals in escrow. We've got about 58, 60 deals in escrow right now as we speak. And I would say in terms of call volume, California's made a comeback. Arizona is extremely hot for us. Nevada is extremely hot as well. As we start making our way Midwest, we have Ohio that gets a lot of inquiries, and of course, Florida and New Jersey has been very good to us. We've got a lot of deals that are in escrow in New Jersey, and of course, New York. So these are kind of the markets right now that I would say are hot or deals that are actually getting done. And I would also mention that some of these other more mature markets, like when you talk about Colorado, Oregon, Washington, surprisingly, even though there's not as much deal flow, there's some big players that are actually looking to just come in and dominate and just swoop up and pick up a lot of these other deals. But if we're talking about what's the hottest right now, again, California, Arizona, Nevada, Ohio, New Jersey, New York, obviously Florida, and a lot of these upcoming markets. So those are the ones you want to pay the most attention, but you're also paying, closer to top dollar for those.
And what about sectors? Cultivation, retail, processing, distribution, anything hot?
So storefronts are obviously very hot. People are building their portfolios for retails, but I would say cultivations that are already established. No one's really looking for paper licenses. People are looking for cultivations that are built out, typically ones that are already distressed.
For pennies on the dollar.
For pennies on the dollar, yeah. So yeah, cultivations that are indoor and storefronts are the hottest thing right now. So that's kind of what you want to be able to, if you're a seller and you're looking to sell, I would just finalize with this. If you can keep your head above water, I would say try to hold on. If we do get 280 to go away, I'm not saying valuations go up. We still need that injection of capital, especially if the safe banking were to pass. But I still believe that the first 6 months that happens, that's when you're going to want to package this up and be able to maximize your sale and not hold on for it forever.
And the thing to do now is to get prepared and get ready to take advantage of that window of opportunity, because we don't know when it is coming. It will come at some point, and it will be perhaps the greatest boom in cannabis industry history, which is saying something considering what we've been through. But we don't know when, right? It could be a month from now, it could be a year from now, it could be 3 years from now. If you're ready, you'll be able to take advantage of it. If you're not, you could be left standing there doing what.
Which is why it's a good time to be getting prepared, because everything moves so slow. So if you don't have your together, right, this would be the time to be able to start putting everything together for at least, as fast as you can. So,
Closing thoughts?
Yeah. So I would say my closing thoughts are, again, I think it's very, very important for people that have been in this business, that have been in it for a long time. If you can keep your head above water, valuations are at an all-time low, and I believe they're actually going to be like that from between now and Q4. But I do believe that if you could hold on to it and do all the things we spoke about, you'll actually be able to reap the benefits of everything that you put together. So
Okay.
fruits of your labor.
Jacob, closing thought.
Sure. The services side of things can't be more important as these businesses are raising money and then getting towards a sale process. Having all your ducks in a row, banking couldn't be more important. Payments couldn't be more important. Insurance as well. And so those things are gonna really help speed the process up and maximize the value for your business.
Jeff?
Yeah, I would just say in closing, to make sure you do your homework, make sure that your risk mitigation techniques and processes are strong. Make sure your policies are up to date, and make sure they're real. Whether that be a buy-sell, arrangement between the partners, whether that be making sure that all of your, your data room, which would include your insurance policies and your SOPs, all those things are in place to make you an attractive, asset to be able to buy or to be able to attract investment.
Okay, well, so thank you all for joining us. I hope you found this informative. The key thing here, I would say, as my final takeaway is, run your cannabis business like a business. It is a business. Yes, we have the additional overlay of federal illegality and all the regulatory compliance costs and burdens, and lack of credit card processing and all the other challenges that we have in the industry, but it's still a business, right? A cannabis license is not a golden ticket to print money. It's an opportunity to take a swing at the plate. Remember, most batters make out most of the time, as do most businesses fail. The key is run your business, operate your business like a business to make money. Keep your costs down, increase your revenues, control your risks, do the things that you can do to maximize your value so that when the next boom time comes, you are ready to take advantage of it.